What's up everyone, my name's Robbie, this is Robbie and Neil, and today we're talking about why there's not a housing bubble. Now I'm sure you've seen tons of articles lately talking about a potential housing bubble. Articles like America's housing boom is officially overheating everywhere. And real estate investor who shorted subprime mortgages says that this housing boom's in a bubble too. And man tosses alligator through Wendy's drive-thru. How did that get in there? So right now the US housing market is on fire. Home prices are growing at the fastest pace that they have over the past 15 years, up 11.2% year over year. And so of course the last time this happened, it ended really badly and we're predetermined to think that it's gonna happen again. And so the question is, are we in another housing bubble? And the answer is, no, we're not. And to figure out why we're not, we need to go back to the year 2007. So back in the summer of 2007, things were really starting to unravel. And I was an intern in New York City at Deutsche Bank. So my team was actually directly next to a team that was involved in mortgage-backed securities, which ended up being one of the big causes of the financial crisis. And look, yes, I will admit I probably didn't grasp what was going on at the time. I was more concerned with the fact that I kept getting the lunch orders wrong. I got the lunch order wrong for the girl on the mortgage-backed securities desk not once, but twice. And I'm still scarred. At the time when I was an intern, you could really tell that something was going on. Now, I didn't know it was going to be a giant financial crisis, but you did get this feeling that something was wrong. And so mortgage-backed securities weren't the only problem at the time, but they were definitely a part of the problem. Really what happened was like a wrecking ball of multiple different things happening at the exact same time. So on one hand, you had what the old Fed chair Alan Greenspan used to call irrational exuberance. People are essentially just drunk on the greed of housing prices going up. Unfortunately, banks were a huge driver in this irrational exuberance as they tried to beat each other's quarterly earnings under a relaxed regulatory environment. And more specifically, one of the factors of this irrational exuberance of the banks was something called subprime lending. So any loan to an individual who has a FICO score of less than around 620 would be considered a subprime loan. And so lots of people who probably shouldn't have been getting loans were getting lots of money, and the loans that they were getting were adjustable, they were interest only, and it was in an environment that was relatively a low interest rate environment. And so let's list down this perfect storm. You have people with bad credit getting loans. Interest rates are low, so they're getting more expensive houses than they should. And on top of that, many of these loans are interest only, so they're not paying principal and they're not building equity in their home. And the loans are adjustable, so when interest rates increase, so does their monthly payment. Now think about this from the homeowner's perspective. The value of your home starts to go down. Your loan is probably more than the actual house is now worth. The amount you're paying monthly is going to actually go up because it's an interest rate that's adjustable. But you've been paying an interest-only loan, so you don't have any equity in your home anyway, so you don't have good credit, and if you walk away from your home, how bad is it really going to hurt? Your credit's already bad, you have no equity in the home, so why not? And this is actually what a lot of people ended up having to do. And so what happened was this bled into the financial system because the banks, they were taking these loans and they were creating securities out of them. And as people started walking away from their homes, these securities started to lose a lot of value. And as you remember, I actually worked next to the people who dealt with mortgage-backed securities in Deutsche Bank. Now there was another thing going on that made these mortgage-backed securities defaults even worse because there was this accounting rule called mark-to-market. And we don't need to go into detail about that, but just know that it really kind of sped things up. And so, okay, that was like an overview of what happened in 2007 and 2008. And so the question is, why are we not there right now? The average home price in 2007 was $322,100. And now it's already up to $384,600. So it's way higher than it was in 2007. A lot of people look at that chart and they'd say, Robbie, how does that not look like a housing bubble? And one of the reasons this is not a bubble goes back to subprime lending. Look at this chart of mortgage originations on Ben Carlson's blog. These are mortgage originations by credit score. The dark blue part of these bar charts show people with credit scores of less than 620, essentially subprime lendees. Look at the first quarter of 2007. Look how big the bar is for people with credit scores of less than 620. of subprime lendees. I'm just eyeing it, but it looks like $100 billion was lended to people with credit scores of less than 620. If you go up from there, you have people near subprime, the yellow part of the bar. And if you add this up, it's $200 billion for people with FICO scores in these brackets. And how does this look today? Well, I'm just eyeing it, but it looks like maybe $20 billion was lended to people within this FICO score in the most recent quarter. Now, if you don't believe me because of that, take a look at the loans for people in the 760 or higher credit score. Look how giant this piece of the bar is for the people with the best credit scores. And look at what that was back in 2007. What this tells me is that people right now getting homes have amazing credit, and there is no risk of the subprime mortgage problems that we had in 2007. And you might be saying, okay, fine, Robbie, whatever. Housing prices are still going really high, really fast. And so the reason this is happening is actually maybe not what you think. And so let's go over that after we run the intro. Okay, so the real reason that housing prices are getting so high right now is not because of an abundance of credit like in 2007, it's because of lack of supply. If you've taken Econ 101, you know there's two factors. There's supply and there's demand. If supply goes down and demand stays consistent, prices are gonna go up. What happened during the pandemic was people weren't really selling their homes. They didn't want people going to open houses and sneezing all over their living room. Whoa. This house is nice. Is that a dog? Oh yeah, that's Frank. Don't do it. Don't do it. Don't do it. Get out. So anyway, and even before the pandemic, we had a shortage of 2.5 million homes in the US. As we get through this pandemic and millennials start moving out of their parents' basements and starting families and buying homes, demand's gonna go up. And because you can't fill a shortage of 2.5 million homes overnight, demand's gonna probably stay there and supply's probably gonna be a little constrained for a while. And this is actually the next argument against the bubble. Because it's gonna take time to fill that gap in supply, even if interest rates do go up, there's still gonna be a lot of demand. And I know there's a lot of people who are like, interest rates are definitely gonna rise for sure, and home prices are gonna definitely decline when that happens. But even the Fed has said that it's probably not gonna raise interest rates until at least 2023. And so, okay, fine, say inflation is above the Fed's target and they decide to raise interest rates in 2022. There's still a lack of supply in housing and likely demand. And so even if interest rates do increase, there's still likely gonna be demand. Now, it might not be an 11.2% growth year over year like it is now, but maybe it'll be normal, like 2 or 3%, or at the worst, maybe it's flat. So the last thing I want to say is that real estate is highly local. While I don't think that there's a US real estate bubble, and I don't think there's going to be one anytime soon, it doesn't mean that certain regions might not have problems. Your local or regional real estate market is going to come back to supply and demand. If home prices in your local market or your regional market are outpacing the national average, or maybe there's more supply in your local or regional market, then where you live might have a different outcome. So it really is good to look at what's going on in your local market or your regional market and then decide from there. And so that's all we have for this video. Thank you so much for watching. I hope it helped. And if it did, please hit the like button, subscribe if you want to see future content like this. And if you want to watch any more of my other videos, you can do so by clicking on the end screen that's coming up right now.